The stock market is sometimes tied to how the economy is doing. And if you just look at the market in October, it looks like, well, the economy is doing pretty well. But is it really? Joining us to talk about that is financial advisor Bruce Allen of Bruce G. Allen Investments. Bruce, good morning.
Good morning, Gary.
So you say the markets did pretty well in October.
October was a tremendous month. We were up 7% based on the S&P 500's performance, and that broad-based index had its biggest rise in October for the year so far. It's also the biggest month we've had in stocks since November of 2020.
Yeah, that's saying something because the market's done pretty well all year. So what's driving the market higher at this time?
What we saw in October was significant earnings growth in some of the very large technology stocks. But digging deeper, Gary, we also saw some big moves in railroad stocks and other kinds of companies. And while you never know if that's just going to continue, we see significant moves in a broad base of stocks. And that's what makes me kind of happy.
Yeah, what's behind the overall market rise in 2021? Can you tell?
Yeah, there's probably three sectors that have been driving the market higher. And believe it or not, while information technology, the big technology stocks get a lot of press, they're fairly far down the rankings. Number one, the biggest gainers this year so far, at least, have been energy stocks. And as of last night, they were up over 57%, Gary, which is a pretty tremendous rise. Number two, the financial stocks are up significantly, and they were up, hang on a second, I got to check, up over 39%. And then information technology, while getting a lot of press, is up only, and I say this sarcastically, 26+%.
By saying a lot of people tie the stock market to how the economy is doing. So does the market really indicate how the broader economy is performing?
Well, typically we see with this kind of economic growth, we had a very robust economy in the first half. And while the economic growth has slowed in the third quarter, we're starting to see signs that the economy will do better as we go forward. And I think that that's best indicated by yesterday's comments by Federal Reserve Chairman Powell, who said that he is going to taper off or reduce the level of bonds that the Federal Reserve has been buying to keep interest rates down. And they're gradually taking away some of the programs they put in place to help the economy grow during the COVID pandemic.
It's all good news if you have a 401k or investments. Bruce Allen, as always, thank you. We appreciate it.